Hello and welcome back to the Geordie Pig Investor channel. Today we are going to have a look at is Merck and Co stock a buy right now. What is Merck and Co? Stock ticker MRK. Merck and Co is a global healthcare company that primarily focuses on the development, manufacturing and marketing of pharmaceuticals, vaccines, biologic therapies and animal health products. Some key stats to do with Merck and Co is they are based over in the United States. They are in the healthcare industry, have a market cap of 251.8 billion. They actually went public in 1946, have currently over 70,000 employees with a dividend growth streak of 14 years and a 5-year dividend growth rate at a very healthy 7.67% and a dividend yield also very nice at 3.25%. As we can see on the graph on the right hand side, over the last 6 months, this company has had a little bit of a decline. The stock is down 25.11%. So in today's video, we're going to have a look at, is Merck & Co a buy right now? Merck & Co earnings call and fundamental analysis. In Q3 of 2024, Merck & Co reported 16.7 billion in revenues, which is up 4% compared to the same period last year. This was driven by a 21% increase in Keytruda sales to 7.4 billion, while Gardasil sales fell 10% to 2.3 billion due to a slow recovery over in China. The strong demand in other regions provide optimism, and the firm expects annual revenue growth of 6 to 7% for the total of 2024, targeting 63.6 to 64.1 billion. The EPS guidance is $7.72 to $7.77. Furthermore, the anticipated launch of new products is just going to reinforce a strong long-term growth outlook. Some key fundamental stats to do with Merck & Co. They currently have a positive free cash flow at a very healthy 14.8 billion, have exceptional 3-year average ROE at 26%, positive operating income at 21.7 billion, positive gross profit at 48.4 billion, positive net income at 12.1 billion. The company has very good long and short-term solvency. They have a low debt to equity at only 0.79, a high Altman Z-score of 4.2 with high interest coverage as well. The only negative to do with the company that I could find is their positive net debt at 20.4 billion, but they do have a lot of capital invested elsewhere and are investing in long-term projects, so this is not to be on the worrying side. Merck & Co free cash flow. Free cash flow is the money a company has left over after it pays for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction a company may be heading. If we have a little look at the graph here, we can see that Merck & Co has a very healthy free cash flow position, as highlighted in the previous slide, being up over 14 billion. Merck & Co.'s free cash flow has shown some fluctuations over the past few years, particularly during COVID. It took a little bit of a dip, but has recovered since very well and has recently been hitting all-time highs again. The company have proved that they can consistently pay out their dividend at an increasing rate without affecting their FCF. This is a massive tick in the book of a dividend growth investor, not to add to the payout ratio is also only at 64%. There's still a lot of room for growth for that dividend yield, for them to continue increasing that. And with that 5-year rate being up over 7% already, it's very, very much promising signs for Merck & Co. And at the current price that the stock is being down 25%, like I said, over the last 6 months, could now be potentially a good time to buy. We're going to have a little look at their discounted cash flow valuation. The DCF is a method of estimating the current value of a company based on projected future cash flows adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flows based on selected operating models. Merck & Co.'s current price is $99.50, and on the worst case, when plugging in my numbers of a discounted rate at 8.6% and a terminal growth rate at negative 3.1%, we can see Merck & Co. will be valued at $87.43. With my discounted rate being 8.2% and a terminal growth rate at 0%, Merck & Co. would actually be worth $141.13. And with a discount rate of plus 7.8% and a terminal growth rate of plus 3.1%, we can see Merck & Co. would be valued at $254.35. Not only do we look at the DCF valuation, but I also like to look at something called the relative valuation. By looking at these two together, we can then come up with something called the intrinsic value. The relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it includes is EV to revenue, EV to EBITDA, and PE ratios. When plugging in my numbers on the worst case scenario, Merck & Co. was to be valued at $120.43, base case being worth $133.30, And the best case, Merck and Co was valued at $147.36. So as I just mentioned, by adding the two together and dividing by 2, we can then come up with the intrinsic value. So my best, average and worst case prices for Merck and Co's intrinsic value is $103.93 on the worst case, $137.22 on the average case, and $200.86 on the best case. And like I mentioned before, their current price is $99.50. So even on the worst case scenario, as of right now, it looks fairly promising that Merck & Co could be somewhat of a buy. Not only do we look at the intrinsic value, but I also like to look at the Wall Street estimates and their one-year price targets for stocks that I'm potentially going to be investing into. Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that lead to a valuation of that particular company. These numbers are forecasted by a company-specific analyst who provides research on that company and therefore comes to what they believe is an accurate valuation. When we had a little look at the Wall Street estimates for Merck & Co, on the worst case price, they believe it is going to be worth $101, which is a 2% upside. On the average case, they believe it's worth $131.54, which is a 32% upside. And on the best case, being worth $162.75, which is a massive 55% upside. Overall, what does this mean for Merck & Co? As I've previously mentioned, we know the price is $99.50, and now that I have my three valuations, I can combine them together to get my final best, worst, and average case price for this stock. On the worst case, Merck & Co is worth $102.95. So with a 10% margin of safety on the worst case price, you'd be looking to buy the stock at $92.65. And with a 20% margin of safety on the worst case price, you'd be looking to buy Merck & Co at $82.35. On the average case price, we can see Merck & Co be worth $135.32. So with a 10% margin of safety, you'd be looking to buy the stock at $121.80. And with a 20% margin of safety, you'd be looking to buy the stock at $108.28. Finally, on the best case scenario, we can see Merck & Co is valued at $188.15. So with a 10% margin of safety on the best case price, you'd be looking to buy them at $169.33. Or with a 20% margin of safety on the best case price, you'd be looking to buy this stock at $150.51. What does this mean for Merck & Co? Is the stock a buy right now? Merck & Co has a strong product portfolio with their leading cancer drugs continuing to drive significant revenue growth. The company also has a diverse pipeline in many different sectors and are going to continue to diversify across different sectors in the years to come. Merck & Co has shown consistent revenue growth in recent years with its notable increases to free cash flow in 2021 and 2022 and again this year. The company has strong financials with a robust balance sheet and the ability to generate substantial cash flow, which is very important as a dividend growth investor. They also offer a very solid 5-year dividend CAGR at over 7% and have a solid starting yield at over 3%. They're also continuing to invest in research and development, promising advancements in its drug pipeline. This positions the company for long-term growth, particularly in oncology and other high-demand sectors, which should only help the share price grow over time. So if you believe in the long-term prospects of Merck's pipeline and its ability to adapt to competition, it could be a good addition to a diversified portfolio. If you've got this stock in your portfolio, let me know in the comment section down below. I hope you enjoyed today's video. Please let me know of any other stocks you want to see a full breakdown on. Please like and subscribe. Thanks for watching. This is the Geordie Pig Investor. Over and out.